Welcome to the deep dive. Today, we're going deep on a topic I know you've been wanting to understand better, the impact of international capital flows, especially like how they hit those emerging markets.
Yeah, yeah, it's a complex area for sure.
For sure. And we've got this awesome paper to help us break it all down. It's from 2016 by Blanchard, Austri, Ghost, and Schumann.
Oh yeah, I know that one.
Called Capital Flows, Expansionary or Contractionary, and it's been cited like a ton. So we know it's a big deal in how we think about this whole thing.
Definitely a game changer. It really kind of challenges some of those old school assumptions,
hmm
especially about, the different types of capital and how they actually work.
Totally. Like traditionally, we've always been told that, more money flowing into a country is a good thing, right? Like more money, more growth. But this paper really kind of digs into, whether that's always true.
Yeah, it's not quite as simple as that. It's way more complicated.
Right.
Um, you can think of it like blowing up a balloon. So as you put more air in, that's like your capital inflow, the balloon, it expands.
Uh-huh.
And that's kind of like your currency appreciating. But the more you keep inflating it, the more fragile the balloon gets, right? And then, it becomes way more vulnerable to like any little shocks or posts.
So a sudden rush of capital into a country, that could actually make things less stable, not more.
Exactly. That's actually like one of the big insights from the Mundell-Fleming model.
Okay.
But what's really cool is that this paper goes even further. It says, hey, look beyond just how much capital's flowing in. We got to focus on like what kind of capital it is.
Ooh, so it's not just about more money, but the right kind of money.
Absolutely. The authors, they make this really key distinction
Yeah.
between what they call bond flows, which are basically loans, and what they call non-bond flows, which are things like, foreign direct investment or FDI, or equity investments in companies.
Okay, so let me see if I've got this straight. If, like, a bunch of investors decide, hey, we're going to pour money into this country's government bonds,
Right.
that's a bond flow. And that might actually not be as beneficial as, say, a company coming in and actually, like, building a factory there.
You got it.
Okay.
And, think about it this way. When investors buying a bunch of bonds, what happens? It often drives up the value of the local currency.
Right, right.
And then what happens? Exports get more expensive, imports get cheaper,
Mm-hmm.
and, that's not always great for a country that's trying to like grow its own industries and stuff.
Yeah, that makes total sense. So it's not just about the capital coming in, but about what that capital's actually doing once it's inside the economy.
You hit the nail on the head. And this is where the paper like gets really interesting.
Yeah.
They look at 19 different emerging markets.
Wow.
And what they found is actually pretty surprising.
Okay.
The bond flows, not much impact on growth at all.
Really?
Yeah. But the non-bond flows, those actually boosted GDP.
Whoa, hold it. So it's not loans or like government bonds driving the growth. It's the investments that are like directly into businesses that are really moving the needle.
That's what they found, yeah.
That's huge. Okay, so how do they explain that?
Well, think about what happens when, like a company gets this big influx of foreign direct investment. Let's say there's this tech startup, right? They're developing like a super cool, groundbreaking app, and suddenly they get like millions in funding from this huge international firm.
I see.
It's not just about the cash infusion, right? It's
Right.
like it's a validation of their idea. They get connected to this global network. It's fuel for them to just like expand super fast. They can hire more people. They can invest in like R&D, reach new markets, and all of that has this like ripple effect throughout the whole economy.
Yeah, so these non-bond flows are like injecting like growth hormones into like a very specific sector, and then that helps the whole body thrive. Whereas the bond flows are kind of more like giving the economy a sugar rush,
Ah ha ha. Yeah, I like that.
a quick boost, but then maybe a crash later.
That's a great way to put it. It really challenges like how we usually think about capital flows.
Yeah,
It's not just like, oh, open the floodgates, let the money pour in.
right.
It's like we got to understand the nuances of these different types of capital and how they actually impact different parts of the economy. It's complicated.
Man, this is often making me like rethink everything I thought I knew about how this whole global finance thing works.
Oh, yeah.
Okay, if the type of capital is so important, what can policymakers actually do about it? Like, how do they
That is a great question.
stop steer things?
And that's where things get even more interesting, right?
Yeah,
Because policymakers, they're not just like sitting back watching this happen.
right.
They've got actual tools, things they can do to influence these flows. It's kind of like a conductor leading an orchestra. You know what I mean?
Okay, now I'm really intrigued. Tell me more about these conductor tools. What are we talking about here?
Well, they've got a few key things they can use. One of them is called, and this sounds complicated, but it's really not. It's called sterilized foreign exchange intervention.
Okay.
Basically, it's a way for central banks to, like, manage the value of their currency without messing around with their domestic money supply.
Okay, break that down for me. Like, how does that actually work?
So imagine a central bank, right? They want to, like, prevent their currency from appreciating too quickly
Uh-huh.
because there's all this capital flowing in, right? So what they can do is step in and actually, like, buy up some of that foreign currency, say U.S. dollars, using their own currency.
Okay.
But here's the key to keep that from, like, totally increasing the domestic money supply and maybe causing inflation. They simultaneously sell bonds in their own market.
Whoa, so they're like a juggler, keeping all these balls in the air at the same time.
Haha, yeah, exactly.
Buying foreign currency with one hand, selling domestic bonds with the other hand.
Yep. All to try and, like, keep that exchange rate stable.
That's wild.
It's a delicate balancing act for sure. And it's just one of the tools they've got, right? Another option is what we call capital controls.
Okay, now those sound a little bit more heavy-handed. Like, isn't that basically restricting how capital can flow in and out?
It can be, yeah. But it doesn't have to be like this super blunt instrument, right?
Right.
Remember, this whole conversation is about nuance.
Yeah.
So a country might say, okay, we want to implement some capital controls that, like, specifically discourage those short-term speculative flows. You know, those are kind of like the sugar rush we were talking about before,
Right.
while still totally welcoming those longer-term growth-oriented investments, like FDI.
Oh, so it's kind of like setting up a filter.
Yeah,
You're letting the good stuff in, but you're trying to keep out the stuff that could be, like, destabilizing.
exactly. And then, of course, you've got that classic tool, interest rates.
Ah, yes, the good old interest rate lever lays them up to attract more capital, lower them to stimulate more borrowing.
Right.
But that has like a whole bunch of other effects on the economy too, right?
Absolutely. Raising rates can totally attract that foreign capital because investors are always looking for the best returns,
Yeah.
right? But it can also make it more expensive for domestic businesses to, like, borrow and invest, and that can potentially slow down economic growth.
So it's like a trade-off.
Right.
You might get more capital, but it might also be harder for your own businesses to really like thrive.
Exactly. And this is where, like, the art of policymaking comes in. There's no, like, easy formula here. It all depends on the specific context, the country's goals, and, what the whole global financial scene is like.
Oh man, this is fascinating. But I'm not gonna lie, it's also a lot to wrap your head around. It's like we went from thinking about capital flows as this kind of simple river,
Right.
and now it's like, oh no, this is a whole complex ecosystem
Uh-huh. Yeah.
with all these like currents and tides and all kinds of crazy creatures swimming around in it.
That's a fantastic ability. And that's really what this paper does so well, right?
Yeah.
It makes us, like, really appreciate how complex these flows are. And there's, like, no easy answers.
So what's the takeaway for someone like me or for our listener, like what do we really need to remember about all this?
I think the biggest thing is we just can't afford to be naive about capital flows.
Yeah.
Whether you're, like, a policymaker trying to, guide a whole economy, or you're an entrepreneur looking for funding for your startup, you got to be strategic. You got to understand those different types of capital and realize that, like, it's not just about the amount of money. It's about, where it comes from, what it's used for, what kind of impact it's going to have in the long run.
That's a powerful message. It really makes you think about how these like big global forces are actually playing out in our own lives,
Absolutely.
Whether we're like aware of it or not, we're all swimming in the same financial ecosystem.
We are. And that's why it's just so important to understand these dynamics.
Yeah.
Because, knowledge is power.
Right.
And the more we understand how all this works, the better we'll be able to, make good decisions, both personally and as, like, a whole society.
Well said. And you know what? I think that's the perfect segue into our like final thought for today's deep dive. Throughout this whole conversation, we've been talking about capital flows. Like it's something that policymakers need to like manage and control, right?
Right.
But what if we could kind of like flip that script?
Oh, I like that.
What if we could actually like direct those flows in a way that actually maximizes their positive impact and helps us build, a more sustainable and equitable future?
That's a great question. It's almost like instead of being defensive, we could be more, proactive and strategic.
Totally.
Imagine, like, channeling those flows to investments in, like, renewable energy or sustainable agriculture,
Yeah.
or education, healthcare, the things that matter.
So essentially using capital flows as a tool for like positive change,
Exactly.
not just like economic growth for its own sake.
Yeah, instead of just letting the money kind of go wherever it wants,
Right.
what if we could create incentives for it to flow to the places that, line up with our values and help us build a world that's not just prosperous, but also like just and sustainable?
I love that.
That's what we need to be thinking about.
I couldn't agree more, and I think that is a perfect note to end on. It's a challenge to, like, all of us, policymakers, investors, entrepreneurs, regular people, to really think creatively about how we can use this power of capital flows to create a better future.
I'm with you on that.
Awesome. Well, thanks so much for joining us for this deep dive. We hope you found it informative and thought-provoking.
Yeah, thanks for listening.
And until next time, keep exploring, keep questioning, and keep diving deep. Okay, so we're back and ready to kind of dig into this whole conductor's toolkit thing.
Haha, right.
You were telling us about how policymakers can actually like shape those capital flows. So what kind of instruments, what kind of tools are we actually talking about here?
Well, like I mentioned, they've got, a few key letters they can tell.
Okay.
One of them is this thing called sterilized foreign exchange intervention.
Mm-hmm.
It sounds kind of complicated, but it's really not that bad. It's basically a way for central banks to, kind of manage the value of their currency without like totally messing with a domestic money supply.
Okay, okay. Can you like break that down a little bit more? How does that actually work?
So imagine you've got a central bank, right?
Okay.
And they want to prevent their currency from appreciating too fast
Uh-huh.
because there's all this capital coming in.
Right.
So what they can do is step in and actually like buy up some of that foreign currency. Let's just say US dollars, for example,
Okay.
using their own currency.
Okay.
But, and this is the key part, to keep that from like totally increasing their domestic money supply and maybe causing inflation, they simultaneously sell like bonds in their own market.
Whoa, so they're like juggling, right?
Oh, yeah.
They're trying to keep all these balls in the air at the same time.
Exactly.
Buying foreign currency with one hand, selling domestic bonds with the other.
That's it. It's all about trying to keep that exchange rate stable.
Man, that's a delicate balancing act.
For sure. And that's just, one tool in the box. Another option is what we call capital controls.
Okay, now see, those sound a little bit more heavy-handed, you know?
Right?
Isn't that like restricting the way that capital can flow in and out?
It can be, yeah. But, it doesn't have to be this totally blunt instrument.
Right.
This whole thing we're talking about, it's all about nuance, right?
Right.
So a country might decide, okay, we want to put in some capital controls, but we want to make sure that they just, discourage those short-term speculative flows.
Uh-huh.
The ones that are kind of like, that sugar rush we were talking about before.
Yeah.
But we still want to like welcome those longer-term investments that are really about growth, like FDI.
So it's kind of like setting up a filter.
Yeah, exactly.
Let the good stuff in, but keep the potentially destabilizing stuff out.
That's it. And then, of course, you've got that, classic tool, interest rates.
Ah, yes, the good old interest rate lever. Raise them up to attract capital, lower them to stimulate borrowing.
Exactly.
But doesn't that also have a whole bunch of other effects on the economy, too?
Oh, absolutely. Raising interest rates, that could make foreign capital really, really attractive because investors are always looking for the best returns.
Right.
But it can also make it, a lot more expensive for domestic businesses to borrow and to invest. And then, of course, that could actually slow down economic growth.
So it's a trade-off.
It is.
You might get more capital flowing in, but it might be harder for your own companies to actually thrive.
Exactly. And this is, where the real art of policymaking comes in. There's no magic formula.
Right.
It just depends on the context, like what's going on in that country, what their economic goals are, what the global financial landscape looks like. It's complicated.
This is really fascinating, but I have to admit, it is a lot to like wrap your head around.
It is. Haha.
It's like we went from thinking about capital flows as like this simple river,
Uh-huh.
and now it's like, whoa, this is a crazy, complex ecosystem
Yeah.
with all these currents and tides, all these creatures swimming around in it.
I like that analogy.
So, what's the takeaway for someone like me or for our listeners? Like, what do we need to keep in mind about all of this?
I think the big takeaway is we just can't be naive about capital flows.
Yeah.
Whether you're a policymaker, trying to steer a whole economy, or you're just an entrepreneur looking for funding for your new business idea. You got to be strategic. You got to understand the different types of capital. And you got to remember that it's not just about the amount of money.
Right.
It's about where it comes from, what it's used for, what kind of impact it's going to have, down the road.
That's a powerful message. And it really, it makes you think about how these big global forces are actually playing out in our own lives. Like, whether we realize it or not,
Oh, absolutely.
we're all kind of swimming in this same financial ecosystem.
We are. And that's why it's so important to actually, like, get it, understand how these dynamics work.
Right.
Because knowledge is power, right?
Totally.
The more we know about how this whole thing works, the better decisions we can make, both for ourselves and as, like, a whole society.
That's a great point. And you know what? I think that's the perfect way to kind of segue into our like final thought for this deep dive. Throughout this whole conversation, we've been talking about capital flows as something that, policymakers need to manage,
Right.
control, right? Keep under control.
Yeah.
But, what if we could kind of flip that script a little bit?
Okay.
What if we could actually like direct those flows in a way that really helps us create the kind of world we actually want to live in?
That's a great question, though. Like, instead of just reacting, we could be more proactive, more strategic.
Totally.
Imagine, channeling those flows to, like, really good things like renewable energy or sustainable agriculture or, even education and healthcare, the stuff that matters.
So using capital flows as a tool for positive change.
Exactly. Instead of just letting the money go wherever.
Yeah.
What if we created incentives for it to go to the places that really, like, align with our values and help us build a world that's not just, prosperous, but also just and sustainable?
Oh, I love that.
That's the kind of thinking we need to be doing.
Totally agree. I think that's a perfect note to end on. It's a challenge to like all of us,
Yeah.
policymakers, investors, entrepreneurs, regular people to really like think outside the box. How can we use this power of capital flows to build a better future?
Yeah, great question.
Awesome. Well, thanks so much for being with us for this deep dive. We hope you found it informative and thought-provoking.
Yes, thanks for listening.
And until next time, keep exploring, keep questioning, and keep diving deep. We've been talking about this stuff on this like huge global scale, but I think what's really interesting is how these same ideas actually, play out in our everyday lives. Like we're not all central bankers or, running these multinational companies,
Right.
but we all got to make decisions about where we're going to like put our money, right?
That's so true. And that's what I love about this paper. It's not just some, like, high-level theory. It's about understanding how capital works, whether it's, a whole country or just your own personal finances.
Totally. Like imagine someone starting a small business, right?
Yeah.
They need capital to get things going, but it can't just be any capital. Like think about a short-term loan with those like crazy high interest rates.
Right.
That could be kind of like those risky bond flows we were talking about. Like, yeah, maybe it gives you a quick boost, but then you could be struggling down the road.
It's all about finding that, like, right kind of capital.
Right.
Just like those countries that are trying to attract, good FDI.
Totally.
Imagine you're that entrepreneur. Wouldn't you rather have investors who, they get your vision, they want to offer guidance and support, and they're in it for the long haul?
Yeah.
That's like attracting patient capital, the kind that really helps you grow in a sustainable way.
So it's like less about finding lender and more about finding like a partner, right?
Exactly.
Someone who's bringing more than just their money to the table.
Yeah.
They've got expertise, connections, they're really committed to your success.
And just like those countries that use those tools to kind of shape those inflows, right? As an entrepreneur, you can do things to, like, signal what you're looking for.
Right.
A solid business plan, a good pitch that really emphasizes those long-term goals, building relationships with the right people. Those are all ways to, try and attract the kind of capital that really fits your vision.
So it's about being strategic.
Yeah.
It's not just taking any money that comes your way. It's making choices that are going to help you grow over time.
Absolutely. And, here's something kind of interesting to think about.
Yeah.
Remember how the paper talked about how those non-bond flows, they had a bigger impact in countries that had, like, less developed financial systems? Could that be true for businesses too? Like, think about a startup in an emerging market or one that's, doing something totally new.
Right.
Wouldn't that patient, strategic capital be even more valuable to them?
Oh, I see what you mean. It's like they've got more room to grow, but they might not have access to those like traditional ways of getting funding.
Exactly.
Yeah, that kind of investment could be huge for them.
It could totally change the game. And that's the question I kind of want to leave our listeners with today.
Okay.
What if we started thinking about capital flows, not just as something to be managed, but as a force we can actually direct to create the kind of world we want to live in?
It's a powerful idea, right?
Yeah.
Instead of just letting the money flow wherever it wants, what if we could like incentivize it to flow towards solutions for climate change or breakthroughs in healthcare or empowering people in communities all over the world?
Exactly. We're not just talking about, like, maximizing profits here.
Right.
We're talking about maximizing impact. using capital to try to create a world that's, not just prosperous, but also fair and sustainable. That's the future we got to be aiming for.
I love it. And I think, honestly, even though this paper is, it's about economics,
Right.
it gives us a way to think about all of this, whether we're running a country, a company, or just making choices in our own lives.
It does.
It's about understanding how powerful capital is,
Yeah, yeah.
making smart choices, and trying to use it as a force for good.
Well said. And a huge thanks to all of you out here listening.
Yes, thank you.
We hope this deep dive has, given you some new ideas and maybe inspired you to keep thinking about these, complex and fascinating issues.
Absolutely. So until next time, keep learning, keep questioning, and keep diving deep.